Learning Unit 5 is the reference in this version of the study guide. Okay, I see they have given you a few practice exercises for self-assessment that you can obviously look at and try do on your own. The first bank recon is just to show you how to actually go about the process. Okay, in other words, how to actually do a bank reconciliation. Okay, so I assume that all of you have bank accounts. Okay, how often do you guys get bank statements? Once a month. Okay, it should either come to the post or at least emailed to you. Okay, that's what banks should do. Okay, because if you have a current account, it's a transactional account. Okay, they have to send you a bank statement monthly. Right, so you'll either get emailed or posted a bank statement, and that bank statement is going to show the transactions in your accounts. Right, so with a bank reconciliation, you're going to be checking what's in your books with what's in the bank's books. Right, so the journals we've already seen. Okay, you wrote this down in those slides that we had previously, where you identified bank as being the account that is going to be affected when we have a receipt or when we have a payment. And it's one or the other. Right, and that's it. It's really straightforward and it's as simple as this. Right, it's standalone, so you can look at Learning Unit 5 or in my notes, number 7, in isolation. Okay, I've given you guys an extra printed exercise that you guys can use to practice. I'm going to leave these extras in the class register, and I'll leave it with Gemma. So for those that aren't here, if you see them during the week, just tell them there's a exercise here that they need to collect. They can actually download it from the website. It's on there even. So you guys can use that if you want to. And this is looking at a bank recon. Okay, so what does a bank recon have? Okay, well, two things. Internal and external records. So what do I have here? Well, two journals. I've got a receipts journal, I've got a payments journal, and I've got a bank general ledger. Okay, we just spoke about this today, the general ledger T account. Okay, it's a T account, it has a debit side, and it has a credit side. Earlier we spoke about this. Okay, receipts increase the bank, payments decrease the bank. Why? Money comes in, money goes out. Okay, and we're looking at what? The bank. These records are the businesses. Okay, so we can write a big heading here, internal records. Okay, these are internal records, meaning the business will have a receipts journal, a payments journal, and a T account for their general ledger called bank. Right, and that's what they'll have. That's internal. Right, and then what are you going to be getting every month? A bank statement. And where does that come from? Comes from the bank itself. Okay, so it comes from the external provider. Right, so then you've got the other little bit here that you need to consider. External is the bank statements. Right, so if I'm looking at the bank statements, can you change the bank statements? No. Okay, whatever you get from the bank is what you get from the bank. Okay, there's no changing it. Okay, it is what it is. Right, but if you don't agree with it, then you take the bank statement with you to the branch and you complain, and if you're right, then they need to fix it. Okay, that's what happens. But can you change anything in your journals? Yes. Can you change anything in your general ledger? Yes, you can. Right, so I can change anything here, but I need to confirm and I need to check if it's in line with the bank. Right, because the bank reconciliation is checking that you and your bank are both on the same page. Right, so in terms of the introduction, I didn't write the word. Oh, the word is there. We just need to write in the other one. Okay, so we're looking at bank, which you know is an asset. Can bank be a liability? Yes. And then it's called a bank overdraft. Okay, in terms of the bank overdraft, that's called a liability, and a liability will have a credit balance. Okay, if I'm recalling the basics from last week, assets, and this week, debit balance. Okay, assets have a debit balance. Right, so that's what we're looking at. We're looking at short term, we're looking at cash, we're looking at bank, we're looking at the bank statement, and we're confirming it with our records. Okay, what's in our books? Right, so why do we need to monitor and manage cash? Well, the business relies on cash in order to operate. Okay, you've probably heard the saying that cash flow is everything in a business. Okay, businesses go bankrupt because of their cash flow, right? Problems with cash flow, not making a profit. Okay, there are businesses in the world that don't make a profit and continue to operate. Okay, if we had more time, I'll send you maybe the financial statements, but Twitter is the perfect example. Okay, Twitter has never made a profit since they were created, since birth. They've never made a profit. Right, so does that mean they don't operate? No, they still do. Why? Because they're still going to have cash flow that they need to monitor and manage. Okay, so if I'm looking at the bank Recon, we're going to be looking at internal and external records, and we're going to be confirming it. Right, so reconciliation. Internal and external. And that's what you're going to be checking. You're checking, do your records match the bank's records? Right, what do you have as external? The bank statements. And internal, you've got journals and general ledger T account, bank accounts. That's what you've got. Right, so 2 journals and 1 T account, and then the bank statement. So, if I'm looking at the bank reconciliation, that's what you're doing. You're confirming and checking that what you have in your books is what the bank has in their books. Which accounts, what accounts do the separate parties record? Okay, so what do I mean by that? Well, in the business, if you've got a favorable bank balance, is that going to be a debit or a credit? Is that going to be an asset or liability? Good. Okay, everybody now knows that an asset is good. So if you have a favorable bank balance in your books, what are you going to record? A debit. Do you think the bank's going to record that? No. Why? Because they're the other party. Okay, 2 parties to every transaction. Okay, you opened a bank account with the bank. They're the other party. So what are you going to have in your books? A debit. What are they going to have in their books? A credit. But a credit isn't bad because the credit says the bank owes you. So those 2 go together. Okay, so you have the asset because the bank owes you. The bank has the liability because they need to pay you what you gave them. Okay, so if you deposit money in your bank accounts, you can go back to the bank at any point in time in the future and you need to get that back. Okay, from the bank. Right, there's a liability. They've got the liability, you've got the asset. It's favorable for the business, unfavorable for the bank. Okay, 2 different parties. Okay, what's on the left is on the left, what's on the right is on the right. But they relate. Okay, this is what you'll have, this is what they have. Right, so then the opposite, if you have an unfavorable bank balance, meaning you have a bank overdraft. If you have a bank overdraft, in your books, you'll have a liability because you need to pay the bank for the additional amount that you've withdrawn from your accounts. Okay, that's what a bank overdraft is. What will the bank have? The bank will have a debit. Why? Because from their perspective, they're owed money from you as the client. Right, so from their perspective, they've got an asset. Right, again, what's on the left is on the left, what's on the right is on the right, it's separate. But those 2 link and relate to each other. Okay, what's on the left is on the left, what's on the right is on the right. Okay, you don't reference anything on the one side on the other side. Okay, your books are your books, their books are their books. Okay, all you're doing is a process of reconciliation. Okay, you're reconciling what's in your books to what's in their books. That's it. Right, so how do we do this? Well, two things that we need to answer. Can we change or adjust our bank account? What do you guys think? Can you change your bank account? Of course you can. How do you change your account? By processing transactions in the journals. And those transactions in the journals affect the general ledger. Can I change or adjust anything in the bank statement? No, you can't. Okay, you can't change what's in the bank statement. If you're not happy with what's in the bank statement and you believe that they've made a mistake, they're the ones that have to change it. You can report it and they can change it, but you can't go into their records and process a journal transaction. Okay. Here's a tip, and this tip helps a lot when looking at practical examples. Always consider whose records are correct or accurate. Okay, what do I mean by that? Well, if my books are correct, am I going to change my books? No, because why would I want to change my records if my records are correct? Okay, if your records are wrong, then you'd have to change your records. Okay, so always remember who's right. That's important. And you'll either adjust or you'll reconcile. You'll do one or the other. Okay, so how do I know when to adjust and how do I know when to reconcile? Here are some transactions that you would have to provide for in a bank reconciliation. Right, so can you guys think of events or transactions that can arise that will not reflect in the bank statement? Okay. Doesn't show on the bank statement. It should still show on the bank statement, even if it's small. Then it's an error, possibly. Okay, so bank errors perhaps. Okay, so the ones that are important here would be things that don't reflect on the bank statement. Right, so we are almost at the end of August. Okay, August has 31 days. If you go into the branch on the 31st of August at 3 o'clock before they're closing the branch, okay, and you make a deposit that afternoon, and your bank statement is for the month of August, do you think that deposit is going to reflect in your books, in your bank statements? No. Okay, because the bank will only process that day. It might take a few hours or two, right? And it'll probably only reflect the next business day, okay, which is the 1st of September. Right, so if you're getting your statement for end of August, you're not going to see that deposit on the 31st of August. So that's called an outstanding deposit. Okay, I think what you were referring to was an outstanding check. Okay, so you make a payment from your account and that payment hasn't gone through. That's also a possibility. And then maybe yours is an error. Okay, something that doesn't appear. Okay, that's possible. Right, so you've got the three. Right, do you think we're going to adjust or are we going to reconcile? So my question is, who's correct? The business or the bank? The business is correct, so adjust or reconcile. We wouldn't adjust because your books are correct. Okay, so if it does not reflect on the bank statement, chances are you're going to reconcile. It would have to depend on the error as well though. Okay, but 9 out of 10 times you're going to reconcile. Okay, just think about who's correct. You'll see how easy it is when we look at an example. Okay, it's just theory now. Okay, it'll make sense when we look at the practice, the practical. Okay. Right, what events or transactions can arise in the bank's books, i.e. the bank statement, but not in your books? Right, so stuff that you will see on your bank statement that you get sent every month, that you won't see in your books. Okay, dishonor checks, fine. Yeah, let's take it a step further. We haven't really looked at that, but we'll discuss just now. What else? You want to answer? Yes, direct deposits or debit orders, stop orders. Okay, good. All right, so those are the lists, or those are the different options. Bank charges, interest, unpaid checks, that's what you were talking about. An unpaid check is a dishonored check. Nowadays, we don't really see checks anymore. Okay, but you might still get tested on it. Okay, so just bear that in mind. Okay, an unpaid check is when you've, okay, recorded a receipt. Right, so let's say, okay, I'm your customer. Okay, you guys are all running your own businesses. Okay, I come to each and every one of you and I buy an item. Okay, but now I've bought so much from all of you. Okay, let's say the check that I wrote out to you doesn't go through. Have you recorded a receipt? Yes. Okay. So does that receipt reflect a receipt? No, because the payment didn't go through. Okay, so unpaid checks are dishonored checks, checks that don't go through. Nowadays, that doesn't really happen. Why? Because people don't use checks. Right. In the past, people did use checks, and checks were open to fraud. Okay, it was easier to commit fraud using a check than it was nowadays. Nowadays, security is very tight when it comes to banking. Why? Because of the past, yeah, because of history. Okay, so there's actually a film, quite an old film with Leonardo DiCaprio and Tom Hanks. Catch Me If You Can. You might or might not be familiar with it, but that looks at that. Okay, Leonardo DiCaprio acts as, it's a true story, it's based on a true story, he basically impersonates different people, and he goes around and he kind of signs blank checks, and he gets away with it for about a year or two, until the FBI eventually catches him. Yeah, so it's a Hollywood film back in the 2000s and something. Okay, but it basically refers to that, the fraud. Okay, open to fraud. Okay, so dishonored check is what you guys will see potentially in your questions. Okay, and then obviously errors again. Errors appear in both. Okay, humans are prone to making mistakes at times. Okay, so both the bank can make a mistake, so can the business. Right, so are we going to adjust and reconcile here? Well, the bank statement is correct, so we wouldn't have to reconcile, we would have to adjust, because now we're the ones that are going to have to do something to make sure our records reflect what their records reflect. Right. Something as simple as bank charges. Right. Will you know how much bank charges you're going to be charged? Unless you're on some fixed package, okay, you won't know, right, until you get the bank statement. And they said, okay, well, these are your transactions, okay, this is the bank charge. Right, now you know how much you've been charged, then you'll record it in your books. Okay, so that's how the bank recon works. You check their books and your books, and you see who's correct. Here's the process. This we're going to do using that example. Okay, that's the last bit for today, is the actual exercise. Right, so the bank reconciliation process, you start with the bank statement. Why? Because you cannot change it. Right, so that's the best place to start. We're going to have that as the opening line item in the bank reconciliation statement. Okay, so let's draw this up as we go. Right, so the first bit that we need to draw up is this. Bank, that might be a bit too small. Okay. Right, bank reconciliation statements. Right, what does the bank reconciliation statement have? Well, it's literally two columns, a debit column and a credit column, and that's it. Okay, so draw that little bit up. Okay, there's the debit, there's the credit. Right, the next bit. Point number 2 says, compare the bank statements, which are external records, to the cash journals, which are internal records. And that's the process of checking. Right, so that's what we need to do. And then we're going to highlight separate items not appearing in the bank general ledger account and the bank statement. And then we need to either adjust or reconcile. You never ever do both. It's one or the other. Right, so you adjust when you need to fix or change something. You reconcile if the bank needs to do something. Okay, that's what we need to do. Okay, that's what we need to see. Okay, that's the process. Right, so what are we going to have in our books? We have to have something. We can't start with nothing. Right, so let's draw up a journal. Okay, you just need 3 columns. Well, 2 columns actually. We don't have to worry about the date. The date would be for the last day of the month. What is this for? June. Okay, so cash receipts journal. 3 columns, 1 for the day, 1 for the details, 1 for the bank. That's it. Okay, short and sweet. Do the same thing for the cash payments. 3 columns. Cash payments journal. Right, and then draw up a little T account. Okay, remember we spoke about this? Businesses have journals and a general ledger. Businesses will have cash receipts and cash payments and a T account for bank. Right, and that's it. Okay, let's put a heading here. Bank. Okay, I'm going to add to our notes here. Okay, you'll get this when I send it to you, so don't stress too much. I'm just going to add a few notes here at the top. Adjust, reconcile. Right, so if I adjust, I look at the stuff on the left. If I reconcile, I'll look at stuff on the right. Okay, I don't think UNISA gives you an answer sheet. I think you've got to draw this up, if not mistaken. Okay, they might have changed things, but last semester, semester 2, 2017, that was the last time I helped the professional law school, and back then they were still asking you guys to draw up the stuff. Okay, they just give you the answer sheets, the normal generic UNISA answer sheets. Okay, so just bear that in, yeah, it looks like that, I think. That might even be like a book that they send you, scrap paper. Okay, but you're going to have to do this. What I would do is I would maybe do all of this on a separate page. Okay, do the receipts and payments on one page, do the T account on a separate page, and then do the bank recon on a separate page. Okay, just leave yourself space if you need to do any workings. Okay, ask for more paper if you need in the exam. Okay, but just try create an answer that's neat and tidy and that's easy to work with. Okay, this is easy to work with. Right, so those columns we can make a bit smaller. Okay, the day column. Right, and then let's make these a bit bigger. And then I think we're good. Okay. Right, so that's what you guys need, just as a starting point. 2 columns for the reconciliation statement, 3 columns for the receipts and payments, and then just a left and right hand side, a debit side and a credit side for the T account for bank, and that's it. Okay, now we're ready to roll. Okay, now we can look at this. Okay, so I've given you the bank recon example 1. Reconcile for the month of June 20x6. Bank reconciliation statement for the month of May. This is for the month of May. Then we've got check counterfills for the month of June. Okay, I'm looking at what I've been given. Then I've got cash deposits for the month of June. Okay. Then if you turn over the page, you've got some additional information, and then you've got a bank statement for the month of June. Okay, what did we say earlier? Can I change what's in the bank statement? No, that's the starting point. Right, so if you look at this bank statement, is this bank statement in a good or bad position? You guys tell me. Page 2, bank statement for the month of June. Okay, do any of you like, or would any of you want this bank account? Is this bank account in a favorable, unfavorable position? You can take an extra copy, I really don't mind. Okay. If if you write on your email address, I'll send you the notes. Then you can also look at it if you really want it. Okay. Right. Okay. Starts unfavorable, ends. Okay, let's have a look. Right. So do you guys agree? On page 2, you guys have a balance here, minus 26,000. Okay. There's a debit here. Are debits good or bad on the bank statements? No. On the bank statement. Okay, so you like seeing debit orders on your accounts. No, you don't want to see debit orders on your accounts. Okay, what is a debit order? It's that Salford contract that you have, and every month you pay a bill, right? Or it's the insurance, or it's the, yeah. Okay, so remember it's the opposites. Okay, that's one way of making it an easy way to remember it. Okay, on the bank statements. Okay, do you guys want to see debit orders? No one wants to see more debit orders than they have to, right? Okay, so a debit order would be bad because it's a payment. Do you agree? Okay. A credit on the bank statement is good because that would represent a deposit. Does that make sense? All right, so you've got receipts and you've got payments here in the actual bank statement. Right, the bank balance started at minus 26 and then it got even smaller, minus 30. When the credit came in, it got a bit better in terms of a smaller negative. If you keep going down, you can see that the bank balance changes. Right, at some point in time, the bank balance changes from a negative to a positive. So do you guys like this bank balance? Yes or no? At the end of the month, yes, that balance is looking a lot better than the balance at the beginning of the month, right? Do you guys all agree? Okay, so what am I going to do? Am I going to start with this balance or am I going to start with that balance? Which balance do you guys look at? You look at the one at the end of the month. You don't look at the one at the beginning, right? Because the one at the end tells you how much you've got in the actual bank account. Okay, so you guys will be confirming this bank balance. Do you guys all agree? Highlight it, circle it, underline it, make a note that that's the balance we're going to start with. And where are we going to put it? Here. Balance as per the bank statement. Can I change that bank balance? No, I can't. It is what it is. Okay, so this is going to be what? Whatever the amount is. 2871. Okay, so where are we going to put that? Credit side. 2871. Why? It's the balance as per the bank statements. It's favorable. It's a positive bank balance. It's 2871. Okay. It's a credit because on the bank statement it would be a credit, yeah. Okay, whose credit? The bank's. Right, then, next step was to do what? Check every single line item. So when you guys get your bank statements once a month, what do you normally do? You go back and you look at every single transaction and you confirm whether you agree with it or whether you don't. Okay, so let's check. Number 1, what is this representing? A debit. So that must have been a payment. Where do I check this payment? Well, I need to check it with my payments. Okay, do you see a payment here, guys? Is there a payment here for that amount? No. Right, so where else must I check? Last month's bank recon. No, because every month you're going to be doing a recon. And if I look at last month's bank recon, what is last month's bank recon saying? Ah, there we go. Yes. Okay, in May, did I have an outstanding check? Yes. Okay, so let's interpret what happened. In May, you wrote out a check. You gave it to a supplier. What is the supplier going to do? Hopefully deposit the check. Did they? They didn't deposit the check in May, and that's why it was outstanding. Okay? Do you see the check that you wrote out in May in the June bank statement? Yes, so what are you going to do? You're going to tick it. Okay, so nothing wrong with check number 94 on the bank statement. Do you agree? Your books and the bank's books are aligned. What's in your record and what's in their record are correct. I'm happy with that, and I'm happy with this. Those two amounts reconcile. Right, let's check. Now I'm looking at another deposit. Oh, there's a deposit on my bank statement. 2038.27. This was for the month of June. I look back and I look at my deposits. Do I see a deposit for that amount here? No. So what must I do? I need to check last month. Was it outstanding last month? Ah, there we go. There's it. I can tick it. Do you agree? Okay, so in May it was outstanding. Right, so that's an example I spoke about earlier. You went to the bank branch on the 30th of May. Okay? On the 30th of May, you deposited 2038.27. Then you got your May statement and you didn't see it there. Now you're wondering, now, where's my deposits? It's outstanding. So you did that in May and you made a note of it. Right, now June's statement comes and now you see, oh, on the 1st of June, there's my deposit. So now, do your books and the bank's books reconcile? Yes, perfectly. Okay, they've got it, you've got it, everybody's happy. Right, next, correction of an error. Okay, that's odd. Okay, that means a mistake must have taken place last month, right? So, correction of an error, let's look at our books. Okay, in our record, we knew there was an error. We raised an error in May, and the error was for 2911.28. Has the bank fixed the mistake? Yes, so now you can tick it. Right, so again, let's just understand what happened. In May, you went to the branch and you complained because there was a mistake. In May, they didn't fix it. Now you've got your bank statement for June. Now you can see they did fix it, but they fixed it in June. Makes sense? Okay, good. Right, now we've got another deposit. 1st of June, 18,936. You're wanting to confirm that with your records, in your books. Cash deposits, 18,936. Is it the same amounts? Yes. Tick, tick. Let's carry on. Let's look at the next one. What is the next one? Representing a payment. Payment 4286.66. Is there a payment in our books of that amount? There we go. Same amount, same figure. Tick that amount. Tick that amount. Our books and the bank's books are correct. Here's another one. 131, 1607. Is 1607 here? Yes, 1607's there. Tick that one. Tick this one. There's another deposit, 20,740. Can I confirm that one? Yes, I can. There's the 20,740. It's in my books and it's in the bank's records. Tick. $2177.5, another payment. 21775. Ooh, it's not here, hey? Right, so circle, highlight, underline, asterisk. I'm going to highlight it. That's not in my books. Okay, I know the reference is for 132. Okay, I need additional information. So let's have a look. Is there any additional information talking about check number 132? Yes, there we go. Okay, what did the additional information say? The bank recorded check 132 at the incorrect amount. Right, so you're looking at this. 132 at 2177,5. Is this amount correct? No. Who's wrong? The bank. Who's right? The business. So let's see what it should be. What was check 132? There's check 132. Okay, do you see it? Okay, so whose books are correct? The business. Adjust or reconcile? Reconcile. Okay, we don't adjust because our books are correct. Okay, so there's nothing wrong with 2378. The question said, the bank has recorded check 132 at the incorrect amount. So the bank's wrong. We're going to go to the branch. We're going to query, and we're going to record a bank error, check 132. Right, what was the check supposed to be? 2378, 5. What is the check representing? 217. So does the check have to go up or down? Needs to go up. Right, so is the bank going to process a debit or is the bank going to process a credit? They're going to process a debit. Okay. What's wrong? Okay, that's good. All right. Yeah, so the bank captured incorrectly. Yeah, check counterfoil. All right, so 2378.50. Let me just take the figures from here. Okay, we need to work it out, the difference. So 2378.5 minus what was the other amount? 272,177.5. There's the difference. 201. Okay, let's go back. Go back to the bank statement because that's what we're checking. The service fee. A service fee represents a bank charge. Do you see a service fee here in your books? No, it won't be there. Okay, bank charges will always be an adjusting journal entry. Okay, we spoke about it earlier in the notes. Right, so let's highlight that one. Okay, so whose books are correct? The bank's. Adjust, reconcile. Adjust, the bank is correct. So you need to adjust. Yes, so go to your cash payments because you're needing to adjust. Right, I can't start with nothing. I have to start with something. So we need to write down total. Total. We need to put in the totals. Let's go ahead and have a look at what the totals would be in those accounts. Okay, check counterfoils. Here's the total for the cash payments, CPJ. Okay, this they need to give you. They need to tell you what the totals are. Okay, or they need to give you enough information to work it out. Okay, I've told you what the totals are. So let's just write them in. Okay, so in the cash receipts, I'm going to show 103,211.03. 103,211.03. Great. And in the receipts, no, that was the payments. In the, that was the receipts. In the payments, 27,369.33. Okay, you have to start with something. Right, I'm adjusting my book. So what am I going to show? A service fee. 567, I think it was. Yes. Okay, what have I done? I've adjusted for the actual transaction. Okay. Right, next. 18,000 debtor. Is it in the cash deposits? No. So we need to look for this information. Okay, there was a direct deposit on the 7th of June. There's it. Highlight this one. Whose books are correct? The bank's. Adjust, reconcile. Adjust. Where am I going to capture a receipt? In the receipts journal. 18,000 goes here for a debtor. You can write Godfrey if you want, or debtor, it doesn't really matter. As long as you've got something that represents the receipts. Okay, let's carry on. Can I tick this one, guys? Okay, is 3215, you guys are saying yes, that means it must be here. It is, so you can tick it. Okay, it's in your cash payments. Right, can I tick this deposit? Okay, you guys are saying yes, let's tick it then. 7214, is 7214 there? Yes, I can tick it, fine. Okay, can I tick the 160? No, it's another bank charge. I would highlight it. Right, so 160, whose books are correct? The bank. Just reconcile? Adjust. That's how you do it. Okay, so handling fee. Ooh, I'm not going to fit the whole thing in. I'm just going to write down handling fee then. Or cash fee, either or, doesn't really matter. Or even bank charge, you can write that, 160. Okay. Next, let's carry on. Let's look at the next one. Right, can you guys tick this? 4215. Right, I've got it in my books. Here's the one. I can tick that. Okay, that's there, and I can tick this. That's there. Right, but there's another. Okay, so who made a mistake? Good. Yes. Right, you can also look at point number 10. It even says incorrectly debited. Ooh, sorry. Let's rub this out. Highlight it. Delete. Okay, that bit there. Okay. So let's go and record that. Another bank error. Incorrect debit. So if it's incorrect, what are they going to do eventually when they fix it? Correct. Right, they shouldn't have debited your account twice. Right, so eventually when they fix it, they're going to say sorry and credit the account with 4215. Does that make sense? Okay, it's really self-explanatory. Just think about it logically. Okay, they're going to credit your account because they debited twice. Next. Check RD. We spoke about this one. It's a dishonor check. Dishonor checks you can study will always go where? In the cash payments journal. Right, because the receipt would have been captured previously in the cash receipts journal. Right, it didn't go through, so the payment needs to reverse out the previous receipts. Right, but that you can just always remember. Check RD, dishonor checks. Dishonor checks will always go there. How much? 7,700. Right, can we tick 135, guys? Yes or no? Okay, you're saying yes, so let's tick it. Let's check. Is the payment here 1428? Yes, tick it. Let's carry on. The deposits. Can I tick the deposits? Are you guys happy with this 5439? No. Okay, we need to highlight it then. Right, so 5439,82 we cannot tick. Right, we need more information. Let's look for more information. Here's a point. What does point number 3 say? Well, the deposit number 4 was credited on the bank statement on 19 June at the correct amount. So who's correct? The bank. This amount is correct. We need to change our amount. So what was deposit number 4? Let's go have a look. Here's deposit number 4. Let's highlight it. Okay, was that deposit right? No. Who's right? The bank. Is the bank's amount higher or lower? It's higher. So we've captured a receipt that's too low. So we need to add more by capturing a bigger receipt. So incorrect deposits. Okay, the deposit needs to change with the difference. So, what is the difference? Let's check. 5439.82 less 5039.82. It is 400. Okay, great. So now we know what the incorrect deposit is. Right, let's carry on. Let's go back. Can I tick the next one, guys? 15,300. Do you want me to tick it? No. Is it here in the deposits? No. Highlight it. Right, so we need to look for additional information. 15,300. Let's have a look. Oh, there we go. Another direct deposit for services rendered. Okay, so there were 2 direct deposits. There's another one. So this was the other one. 15,300 was for services rendered. Adjust or reconcile? Adjust. The business needs to change their records. The bank is correct. Services rendered. Okay, please write the whole thing in. I'm running out of space. Okay, what was the amount? Let's check. 15,300. Right, there's it. Another one, complete. Okay, let's go back. Let's carry on. Let's look at the last few. Do you want me to tick 136? Okay, let's tick it. 1964 is correct, so there's it there. I can tick that on as well. Okay. Do you guys want me to tick the 258? Good. Okay, this is an account management fee. More charges. Adjust or reconcile? Adjust. Yes. Management fee. And the amount. Okay, next. Wayne Incorporated. Do you want me to tick it? What is this for? Well, we need to go look. There we go. Point number 9. Is this our check? Somebody else's. Can that happen? Can the bank process someone else's check through your account? It can. Shouldn't happen. Can happen. Let's hope it doesn't happen. Okay? But it happened to this business. So we're going to highlight who made the mistake. Correct. This check is not even yours. Shouldn't be here. Right, so, yes, bank error, incorrect deposit. Not deposit, debit. Incorrect debit sounds bad, but it's the same as the other one. But it's not an incorrect debit in terms of the amount, incorrect check. Let's rather write that. Okay. Either or would be fine. Right, debit or credit though? Definitely. Okay, because they're going to reverse it out eventually, and they're going to give you back the 3150. Next, do you guys want me to tick this? Alright, so let's tick it then. Let's see if you guys are right. 893, is that there? Yes, tick. Fine. Okay, do you guys want me to tick the interest and overdraft? No, there's no interest and overdraft in your books. Do I now need to record it? Yes. Adjust and reconcile? Adjust. Good. Interest and overdraft is bad interest, so interest expense. Interest expense, cash payments, 120. Right, do you guys want me to tick Telcom? No, highlight Telcom. 4,500, we need to look for more information. This was for the telephone line. Point number 8 relates to that. And then we need to record. Okay, so Telcom or telephone. I'm going to write telephone. Yes, you're adjusting. Right, and then the last one in your bank statement, SARS. Okay, that's a debit, 11,234. Yeah, that was a debit order for SARS, for VAT. 11,234. 234, that's going to go here, SARS. Okay, 1, 1, 2, 3, 4. Right, so now you've looked at the bank statement. Everything I've looked at, so big tick for all of this. Okay, let's go back and let's look at the rest of our books. Have I ticked everything here? Is this balance important? No, because that's last month's balance. You don't need this. Okay, outstanding checks. Did I tick these? No, I didn't. Okay, check number 13. Must I still provide for check 13? No, it's stale. Okay, look for additional information. Right, point number 1 talks about that check. Stale check. So what does that mean? Well, this check was probably issued like December. Okay, we issued the check in December, the supplier didn't bank it. We waited for January's bank statement, not there. We waited for February's bank statement, not there. It's now May and June and it's still not there. Okay, when checks are older than 6 months, they become stale. Okay, where do stale checks go? Well, let's think about it. Back in December, when you first issued the check, you would have recorded in the cash payments journal. Now, 6 months later, this check is still outstanding. It'll never go through. So you're going to reverse out a payment. Okay, you reverse out a payment by processing a receipt. So stale checks always go here in the cash receipts. That you can study, same as the dishonored check. Dishonored checks always go here, CPJ. Stale checks always go there, CRJ. Right, so the stale check was for an amount of 2,100. Next, did I tick 78? No. So, it's outstanding. Is there any additional information about that check? No. Okay, we looked at all of this. This one that I haven't highlighted was just for the RD check, the dishonored check. That you can even tick. Okay. Right, so if it's still outstanding, it's still outstanding. Outstanding check, 78. What is it for? 4,000. Okay, let's carry on. That one you would have highlighted. Okay, tick, tick, no tick here. Do I need this balance? Oh, highlighted everything. Okay, sorry. Mouse pad. Do I highlight this? Yes. Okay, do I need this balance? Yes. Okay, why? End of May is beginning of June. Okay, you can't start this T account with nothing. It has to have an opening balance. Right, so the balance for the end of May is the opening balance for June. Right, so there's the balance. Is this a favorable or unfavorable bank balance? It's unfavorable because it's a credit. Okay, these are your records. It's the balance as per the bank general ledger account. Right, so credit side. 1st of June. Balance brought down. How much? 37,167.70. Okay, that gets recorded there. Okay, we're almost done, guys. Okay, now you've ticked everything there. Have I ticked everything here? No, I still need to look at these last two. Highlight those last two. Right, these are checks that are outstanding for this month, for June. So 138, 139. Outstanding check, outstanding check. 138, 139. Okay, they're outstanding. They're eventually going to go through at some point in time in the future. 5,600, 1780. Those are two outstanding checks. Right, they're outstanding because you haven't ticked it. Now you can tick everything there. Right, did we tick everything in our deposits? Also, no. You have number 5, deposit 5, and deposit 6 that are outstanding. Okay, so those deposits will only go through next month, most likely. Okay, so for June, They're outstanding. Those last two need to go here. Outstanding deposits, because your books are correct, their books aren't. Outstanding deposit number 5 and number 6. Okay, the one amount was for 16,780 and the other was for 34,500. Right, have I looked at everything here? Yes, tickets. Right, so now I've looked at the entire question. That's everything. See, we've looked at everything. The last bit we need to do here is wrap up. Okay, so this requires a calculator. I'll add it for you. You need to add up that, and you need to add up this. Okay, there's the total for the receipts. There's the total for the payments. Earlier on today, we spoke about the receipts and the payments affecting the bank T account. Right, what are the receipts going to do to the bank account? Increase the bank. So on the 30th of the 6th, total receipts, CRJ, that figure over there. Okay, receipts increase the bank accounts. Payments decrease the bank accounts. Ooh, formatting here. Next line. Okay, 30th of the 6th, total payments, CPJ, and that amount. Right, so now we need to balance this account off. Okay, this you might need to pay attention to because it might be something that you're not familiar with, so just pay attention if you're not too sure how to do this. Right, so balancing. When balancing means you need to check that both sides are equal. Right, so I need to add up everything here. So if I add up on the right here, that gives me 89,000. I've got 139 on that side. Which side's bigger? The left, the debit side. Okay, the debit side is bigger. Okay, so let's write down that total. Right, so that's step number 1. Write down the bigger amounts on both sides. Okay. Earlier we said, if you add up those two amounts, you get that. There's the sum, 89,000. Right, so are we missing a debit or a credit? We're missing a credit. Okay, the right-hand side doesn't have enough. So we need to balance the account off. So we need to find what's missing. You find what's missing by taking that total and you subtract this and that. And you get that answer there. Right, so that's the balance that you carry down at the end of the month. Balance carried down. So now I know I'm going to start July with a balance brought down of 49,935. That's what I know in terms of my books and my records. Okay, this is the amount that you're wanting to confirm. You're trying to check that amount. Okay, you're wanting to know if this is in our books, yes or no. Right, and then the last step of the bank recon is just to check this. Okay, looking at this, which side looks bigger? This side looks a lot bigger, do you agree? Right, so the same thing applies. Put two totals there, add up all of the amounts, and put the bigger total in. Okay, the bigger total is 61,516. That's the bigger total. Right, then the balancing figure is going to be the balance as per the general ledger accounts. Right, and how do you get this balance? You take that total and you minus all of these debits. Minus that one, minus that one, minus that one, and that one. And if you've done it correctly, you should land up with a scenario that looks like that. Okay, so in other words, what's in your books and what's in the bank's books, reconcile. Okay, and if they do give you a bank recon in your exam, then you'll know if you've gotten full marks or not. Okay, and that's one example. But I'll email you the other example that I've got, and I'll send you the memo as well for it, so you guys can practice. there are more in the textbook that you guys can look at. Okay, the self-assessment, the learning activities, there are sample bank recons here. Okay, similar standards, similar entries, adjust or reconcile. See if you guys can do some of those. I obviously want to get to the past papers. Okay, I will do ones that are in the past papers. Okay, definitely. Right, but you guys can practice. I'll send you guys another example. I've got an example 2 here that I can share with you, and then you guys can see how it goes. Okay, if you have problems, you can let me know next week, and we can look at it. Okay.